Joining me now is Patrick Mueller, president at Bella Advisors. Patrick, welcome.
Great to be with you, Ashley.
Patrick, what developments are you tracking most closely as trading gets underway?
The biggest thing that we're taking a look at here late in the year is just taking a look at where we think AI and tech stocks are going to be heading moving forward. We've got a lot of good earnings that have been coming out, but then we've also had some pullbacks and some different stocks. And so we're just paying close attention to that because everything is so overweighted in just a few tech companies. So we're paying close attention to that.
And, as you just mentioned, we understand that you have your eye on market concentration surrounding the large cap S&P 500. Can you dive further into this and tell us what investors should be mindful of?
I would just be very mindful of having too much money that's allocated to any one particular company moving forward. I would just make sure you're spreading it out and being diversified, tried and true methods, right? Of making sure you don't have too many eggs in one basket. Because like right now, NVIDIA, for an example, if they don't meet their earnings in February, I mean, that's going to be a huge cataclysmic event where it's going to cause everything to start being pulled back. So if you got any one thing that's tied to one particular company and that AI sector just decides to pull back, then people could get really exposed to that. So that would be my take on it, is just not having too much money at risk in any one particular company.
All right, and according to the latest data, majority of traders see one more rate cut this year. Are you aligned with them? And if so, why?
I would. You have Jerome Powell that's been very steady on what he said since last year, that they were going to slow roll interest rates downward this year. They were going to wait till the end of the year. And he's been sticking to his guns on that. So I wouldn't cause anything to deviate. Inflation really hasn't been that much of a factor lately. But one thing that I would be paying attention to moving forward is at some point we're going to start seeing the price increases more on international goods coming into the country from all the tariffs. I don't think that we've really seen the ramifications of that. I mean, we've seen things like bananas and coffee going up here recently pretty significantly, but there's going to be a time when that happens. And when that does happen, we're going to see a pullback in the markets of probably 10 to 20%, I would think, sometime in the next 4 to 6 months.
All right, and the S&P and Dow are both down more than 2% in November. Do you see them rebounding before the end of the year?
It's going to be tough to tell. I would think that they're going to swing down, if it's my personal opinion. And we're paying close attention to what's happening with the support and resistance levels right now in the markets and these different companies and the broad indexes right now. And we'll see, but it's going to be very telling here in the next couple of weeks whether we're going to see that trajectory moving upward or whether it's going to, hit the bottom there and just keep continuing to come down. But I think that we've been going up for so long now that we are overdue for a little bit of a pullback, whether it's here, at the end of this month in December or getting into the first quarter of next year. I think we're due for a pullback.
All right, and what do you think investors should be doing between now and the end of the year?
I'd be taking some chips off of the table if it were me, and this is something that we do for our clients, that right now we're still at all-time market highs. And everybody always says this when the markets are down, that it's only a paper loss, but it's also only a paper gain. There's never been a better time in history to be taking some chips off of the table and repositioning some of those chips, keeping that powder dry and deploying that when we do see the market dips coming up in this year and getting into different sectors, right? That's not so tech driven. Things like energy have been doing really good. Utilities have been doing really good. Not just gold, but like mining, like Van Eck Mining has been doing really good this year. So things that are not so normal that people aren't really talking about, and just redeploying some of that money. So when we do see that pullback, and mainly it's going to be tech when it does pull back, that you're not caught off guard.
All right, and what is your outlook for the market for 2026?
2026, I think it's going to be a good year. I think we're going to have a pullback, but it's going to be somewhat similar to this year. This was a little bit jerky year. We had the S&P that was down 20% back in April, and since we're up, and now the S&P is up a 12% total for the year. I think we're going to see something similar to that next year, where I think we're going to see a pullback the first part of the year. But then once the train gets going, I think we're going to see the markets really taking off. Especially the big thing that nobody's really talking about is how we're able to export now into other countries that we weren't able to export into. So it's going to be really good for U.S. companies moving forward. So I think it's going to be a pretty solid year in 26.
All right. Thank you, Patrick Mueller, president at Bella Advisors.